This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. And you know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Tata Management Group, a registered investment management firm serving individuals, business owners, and family offices.
Hi everyone, this is Mathis Connor with Connor Management Group, and this is the Best Stocks to Buy podcast. Today is Monday, February 26, 2018, and this week we're going to look at the best growth stock to buy right now. Here on our opening slide, we title it The Setup and the Approach. Now, the key objective of this podcast is to present to you a high probability upside potential stock. The key tool we use is a financial model, a proprietary tool we developed that uses multiple valuation approaches across over 6,000 stocks every week. So the view you're getting is not driven by some sensational headline and some popular publication focused on increasing readership, but is simply based on the best investment opportunity we could find for you. An easy way of thinking about our approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, for the backdrop, I truly viewed creating such a model as daunting, but I believe I was well prepared for the challenge. I have both computer programming experience as an engineer and over $15 billion of financing experience as well. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, and then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections they share with the public. Now, a point worth remembering is that these views are based on today, an unforeseen economic report, original conflict, or revised policy can change expectations tomorrow. The benefit of using a professional money manager like Tata Management Group is having someone experienced and seeing the ebbs and flows of the market, as well as giving you educated and experienced opinions. And now, so what did our model find for you this week? This week, the best growth stock to buy right now, we found it to be in the auto manufacturer industry. On to the next slide. It's titled Industry Overview. The automotive manufacturing industry is composed of very large multi-billion-dollar auto manufacturing companies as expected. Here are the 10 largest competitors by market capitalization. They operate globally. Number one, General Motors, followed by Tesla, Ford Motor Company, Fiat Chrysler, Ferrari, Packer, that's P-A-C-C-R, Wabco Holdings, Oshkosh Corporation, Navistar International, and Toyota Motor. And the growth drivers to this industry right now is that higher margin utility vehicle sales are up. Global sales for vehicles are up modestly. Oil prices continue to be relatively low. And there's now the introduction of electric vehicles. Some industry challenges. Consumers are shifting away from traditional passenger vehicles. Vehicle sales have declined in the past year in North America and China, but have increased elsewhere, including Europe and South America. And now for the big reveal. The best growth stock to buy right now that we found is a company called Tata Motors. That's T-A-T-A Motors. And their ticker symbol is TTM, and we see their 6-month upside potential at greater than 40%. On to the quick facts slide. Tata Motors is India's largest automotive manufacturer. The company is the world's 5th largest medium and heavy commercial vehicle manufacturer. The company's automotive segment provides financing through its TML financial services arm. The other group manufactures construction equipment, engineering solutions, and software operations. The company acquired Jaguar Land Rover in June 2008. I think a nice quick way of thinking about Tata Motors is almost like a General Motors of the Far East. I think that's a pretty reasonable description. The website is www.tatamotors.com. That's tatamotors.com. The company is headquartered in Mumbai, India. They were founded in 1996, and they have 7,558 employees. On to the metrics slide. The annual revenue for Tata Motors over the last 12 months was $42.8 billion. Yes, they are sizable. Their net income was $1.5 billion. The operating margins for 2017 were 29%. For 2018, they're expected to also be 29%. So those are pretty healthy margins. On to the valuation metrics. The trailing PE ratio now stands at 11.1, and the forward PE ratio is expected to be 10.2. So that relationship is a positive one. When you want the stock to go up, you want to see the forward PE ratio lower than the trailing PE ratio. The price to sales ratio stands at 0.4. The price to book ratio is at 2.4, and the enterprise value to EBITDA ratio is at 4.9. The company does not pay a dividend, so its dividend yield is at 0%. On to the next slide is a chart, price chart of Tata Motors. The stock has moved quite a bit. I'll say it's been reasonably volatile over the past year. About a year ago, the stock was around $32.75. And right now, the stock is around $28, $29. 6 months ago, the stock had a pretty sharp drop from around $35 down to around $30. And basically, that seemed to have been a over-market reaction due to the company abandoning a partnership it was seeking with a company called Skoda, and there was some modest concern over increases in taxes. The next slide is called Looking Back and Looking Forward. Looking back, concern over the United Kingdom's exit from the European Union had prompted Tata to diversify the manufacturing locations from the United Kingdom to Austria and China. The increase in manufacturing locations was expected to protect the company against currency fluctuations, and the company has been working to roll out its first Jaguar all-electric vehicle. Looking forward, Tata's Jaguar Land Rover division is experiencing strong demand in China, though trending lower in the U.S. and European markets. The company is preparing to significantly expand its product lines with hybrid and electric vehicle offerings. The next slide is called the Why Now, the Bull Rationale. We expect this stock to go up because of an expected increase in sales per share over the next year, decreasing expenses per share over the next year, and also its valuation metrics. Right now, its valuation metrics is what we would consider to be, modest to low, and we expect in the near future the valuation metrics to be even lower, which is a good thing. On to the summary slide. The financial statement quality of Tata we consider to be good. The operating margin trend is looking to be flat and already respectable at about 29%, as we mentioned earlier. The price pattern trend has been a bit volatile. The industry outlook, we expect it to be flat for the automotive manufacturer sector. Overall market outlook, though, we are positive. Economic indicators worldwide look pretty positive. So the recent closing price for Tata Motors was $28.98, and our 6-month price target is at $43, and that gives the company a 6-month upside potential of greater than 40%. So it's for all these reasons that we believe that Tata Motors is the best growth stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care.
Hello everyone, this broadcast was made by Connor Management Group. We are a registered investment advisor and money manager for individuals, businesses, and family offices. We are not your typical financial advisor in that we invest our clients' funds directly into individual stock positions. We do not put our clients into other stock mutual funds. At Connor Management Group, we help you grow and protect your assets. We craft high growth investment portfolios for your children and other minors. We manage the rolled over assets from 401k accounts. We manage IRA and trust accounts. So how do we go about serving our clients? One big differentiator is that we developed some pretty comprehensive computer software that reviews, analyzes, and ranks over 6,000 stocks on a weekly basis. And from that, we create concentrated investment portfolios of well-researched and closely watched stocks. Furthermore, we operate under a managed account arrangement, and that means you open and fund a brokerage account in your name, and we simply manage your investments electronically. That gives you, our client, the greatest control and transparency possible. You can learn more about our service at www.connormg.com. Additionally, we've set up a group on the LinkedIn platform. The name of our group is simply called Stock Investing Tips, Better Returns, Bigger Pockets. Now this is a private group, which means you have to click the Ask to Join link. We do this because we want to be able to control the quality of the member experience. So if you like what you heard and you would like to receive more timely investment information and be able to post questions, just send me a message to Ask to Join our LinkedIn group. You can readily find my profile on LinkedIn. It's Mathis Connor. That's MATHISCONNER. And if you have any problems connecting, just send me an email at mathis@connormg.com. Well, that's all for now, and I'll talk to you in our next broadcast, or hopefully with you in our LinkedIn group. All right, everyone, have a great week.